Which is the best dividend stock to buy? Is it Procter & Gamble? Is it Clorox? Or is it Kroger Company? I'm going to answer that question in this video, comparing these three dividend stocks across four financial metrics, starting with the dividend yield. So let's begin. So looking at these three companies on the dividend yield, you'll notice they're similar in that they're all around 2%. Clorox with the highest dividend yield of 2.2%, followed by Kroger at 2.08%, and lastly, Procter & Gamble at 1.81%. But remember, when you're investing in dividend stocks, you're getting a return on two fronts. You're getting your dividend payment, your dividend yield, but you're also getting the potential for changing stock prices. So that could and that will most likely impact your total return. If the stock price increases, your total return will be much higher. If the stock price decreases, it could take away all of the returns that you get from the dividend. So it's important not just to consider the dividend yield when investing in dividend stocks, but also the potential for changing stock prices. So that's what these next three metrics will consider as well. So the next thing I wanted to look at was annual revenue growth for these three dividend stocks. And looking at this metric, in the most recent year, Kroger had the highest revenue growth at 7.52%. The grocery company has been able to increase prices and exercise pricing power as inflation has increased the cost of groceries for households in the US. So that pricing power is going to be crucial for Kroger, both in its most recent year and in the current year. So inflation is kind of a helper for Kroger, a helper. And also investing in Kroger stock gives investors a bit of inflation protection because Kroger can pass along those prices to customers, right? Groceries are an essential. They are a staple, a consumer staple. And so folks need to buy groceries. You can't avoid buying groceries. That's something that you absolutely need to buy. And so if you have to pay higher prices, you have to pay higher prices. You suck it up and you pay it, and you save costs somewhere else. Procter & Gamble also has done a nice job increasing revenue. Ever since 2016, I've been saying this. Management has done a nice job increasing its revenue by changing package sizes, adding different offerings in the store, and increasing the prices on its products, especially in the last 2 or 3 years or so. Procter & Gamble has done a really good job turning things around, and their revenue growth has been accelerating and reaching 5.35% in the most recent year. Procter & Gamble is one company that is has the opposite effect of inflation, whereas Kroger would be a beneficiary because it can pass along those prices. Procter & Gamble is experiencing headwinds from inflation because, like I mentioned earlier, households need to buy groceries, and so they look to save money elsewhere. Procter & Gamble's products are considered premium, right? So across the board, across their portfolio of products, they have higher priced products compared to competitors. And so if you're a consumer and you're feeling your budget is getting stretched by inflation, you're going to look to trade down somewhere, and Procter & Gamble has been seeing that trade down behavior where people are saying, "Okay, maybe I don't need this expensive detergent. Maybe I'll trade down for the lower priced one." And so that could be a headwind for Procter & Gamble in the near term. And finally, Clorox with revenue growth of negative 3.19%. Of course, Clorox was a significant beneficiary of the pandemic when people wanted to wipe down the surfaces that they were around 15 times an hour. That was really good news for Clorox disinfectant wipes, and they thrived during that pandemic. You could see revenue exploded here. And you might, to be understood, it's coming down because it's having to compare with those elevated levels from the years before. So that's understandable. No knock on Clorox for that. Next thing I wanted to look at is the operating profit margin for the trailing 12-month period. And looking at this metric, Procter & Gamble dominates the other two at an operating profit margin of 21.61%. Clorox coming in next at 9.98%, but I suspect this dip is temporary for Clorox as it adjusts to the changing consumer behavior following the outbreak. I'm confident the company can return to double-digit operating profit margins over the next, I would say, 4 to 8 quarters. And then finally, Kroger with an operating profit margin of just 2.78%. That is its long run average. The grocery business is one with very, very thin profit margins, and that's a little bit higher in recent quarters because of inflation has allowed some of these grocery stores to pass along higher prices to customers, but don't expect that to go much higher. In fact, I suspect this will dip lower. Uh, Groceries becoming even more competitive. Walmart has made a big push into groceries, and now Amazon has signaled that it wants a bigger piece of that. Groceries is an $800 billion industry in the US, and understandably, a lot of companies want a piece of that. So don't expect these profit margins to go higher for Kroger. All right, and the last thing I wanted to look at for these three dividend stocks is their valuations, and I chose to use the forward price to earnings ratio. Looking at this metric, Clorox is the most expensive at a forward PE of 29, followed by Procter & Gamble with the forward PE of 23.75, and Kroger is the least expensive at a forward PE of 10.49. So in my opinion, the decision between which dividend stock is the best one to buy comes down to Procter & Gamble and Kroger. I would exclude Clorox based on the lower profit margin, lower growth, and more expensive valuation. And so it would come down to Procter & Gamble and Kroger. And this is interesting because the decision will depend on how likely you think a recession is in the next 12 months. If you think the US is going to and the world is going to enter into slower economic growth, much slower economic growth, and perhaps a recession, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Then Kroger would be the best dividend stock to buy here. Kroger is more insulated from a recession and it provides some inflation protection. Even if you lose your job, even if you get demoted, even if you experience falling revenue at your business, you still need to buy groceries. You still need to buy groceries. And so Kroger is somewhat protected in the event of a recession. Procter & Gamble, not so much. I've already highlighted the trade down behavior. So if you think we're going to be in a recession in the next 12 months, Kroger is the best one to buy. Otherwise, Procter & Gamble is the best dividend stock to buy here. All right, so that's all I've got for this video. Thank you so much for watching. I really appreciate your viewership. I sincerely thank you for tuning in, spending your time with me, because there's a lot of things you could be doing. You chose to watch this video. Thank you so much. I really appreciate it. And I hope I'll see you again soon.